Can I use my IRA to start a business? Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial, and welcome to another episode of AdBits. Can you use an IRA or Roth IRA to start a business? What are the rules? Is it more complicated than it sounds? And the short answer is no. It's actually quite easy. The hard part, and why you want to work with experts and listen to podcasts and watch videos from me and other tax lawyers, is to understand the prohibited transaction rules that describe and predict when one can use their retirement account to invest in a business without triggering the prohibited transaction rules. So when it comes to examining whether a transaction is prohibited, there's a couple things to keep in mind. First of all, there's three things you cannot do with an IRA. Section 408 says you can't buy life insurance and collectibles like art. So that's not part of this example. Thirdly, Section 4975, which is something we're going to have to analyze when seeking to understand whether one can use their IRA to invest in a business, says in a nutshell that so long as the business, the entity the IRA invests in, is not a disqualified person, and there's no direct or indirect personal benefit attributable to the IRA owner, then the investment can be made. And a disqualified person is you personally, since you're the IRA owner, your lineal descendants, your parents, your children, your spouse, daughter-in-law, son-in-law, or any entities controlled by such persons, which means 50% or more ownership, voting, and the like. Okay, so let me give you an example. This is actually something that, an example that a client emailed me a couple days ago. So this individual sent me this message and said, I am potentially starting a new business with a partner, and I was wondering if I could use my IRA LLC as the partner in the business instead of me personally. And she said it's a shipping business, so we'll have minimal drop shipping business, so we'll have minimal startup expenses. We were looking to set up an LLC, and then the two partners would be my IRA and then my friend personally, or even her IRA. And the first thing I responded to her is I said, okay, how active are you going to be? Right? We know an IRA could own a active business, right? My IRA owns Apple, Tesla, thousands of other businesses, right? Whether individually or through mutual funds. So we know that's not a problem. Clearly, an IRA or 401k can invest in an active business. The question is your personal involvement. So technically, my IRA can own 80, 90, 100% of an actively traded business, no problem. The question is, what is my personal involvement going to be? Am I going to be active? Am I going to be an executive? Am I going to earn a salary? Am I going to have an email address? Am I going to want to be going to work every day, doing conference calls, Zoom calls? The level of activity is what matters, not typically your ownership. So if you are going to be passive, so if this client said, Adam, because this is what I asked her, I said, how active are you going to be? Are you going to earn a salary? Are you going to be running the business? And she responded and said, no, I'm not earning a salary. I'm going to be passive. Sure, I'm going to have conversations with my partner. I'm not going to be involved. I'm not going to be day-to-day in the office. I'm not going to be, having an email address. I'm not going to earn a salary. This is a passive investment. My friend is going to be running the business. I said, okay, in that case, let's see from the IRS's perspective. So let's say our IRA owns 50%. Okay, so that entity becomes disqualified, right? Anytime your IRA owns more than 50%, the entity is disqualified, which is okay. You can technically invest in an entity that's disqualified. Just having an entity that's disqualified doesn't trigger a prohibited transaction. What triggers the prohibited transaction is what occurs, the actions that occur after the entity becomes disqualified. And if you're not doing anything, if you're not earning any salary, if you're not active, if all you're doing is just sitting back and having a couple board meetings and basically going about your day, your full-time job, your hobbies and activities unrelated to the business, and you're simply a passive owner, you could own through your IRA a business, even if it's more than 50% ownership, so long as you're not active. If you are active, and I said if you're going to earn a salary, if you're going to be active in the business, if your IRA owns more than 50%, it's prohibited. You can't do it. Now, what happens if your IRA owns less than 50% and you want to be active? Now you're in the gray area, because now you'd have to show the IRS that you are having your IRA make the investment, and that in no ways directly or indirectly personally benefiting you. Okay, so you can say, well, I have millions of dollars in my pocket. I have potential hundreds of other investors that can invest. The only reason my IRA is investing is because it's going to be a great investment to my IRA. And here, look, I have proof that 10 other people wanted to invest, or let's say the investment amount is super low, right? Like $5,000, $20,000. And you can say, of course I could have done this personally. The reason I wanted my IRA to do it is because the returns are going to be superb and I wanted my IRA to benefit. So anytime you're active in a business and your IRA invests, obviously, so long as it's a private business, closely held, not a publicly traded company, you're in that gray area, right? And there's a case I've mentioned many times over the years called Rollins v. Commissioner. It's a 2004 tax court case, and Rollins was an accountant, and basically he had a bunch of businesses that he owned under 50%, okay? And what occurred is the businesses needed money, okay, which is an important fact, because what he did is he ended up lending through his 401k these businesses money, and they paid back the loans. But nevertheless, the IRS got wind of this investment and they argued prohibited transaction. And he said, Rollins' defense was, no, I own less than 50% of these businesses. How could it be prohibited? It's impossible. There's no disqualified person. And the tax court agreed with the IRS, unfortunately, and said, well, you as a taxpayer had the burden of proof, and you could not prove that you did not directly or indirectly benefit from the loan. And I think the fact that really hurt Rollins was the companies needed money, right? If he was able to show that, hey, I had 3 banks that was going to lend me the money, or I had someone else that was going to give me the money. The only reason I used my 401k was because I knew the interest would go back to my 401k and it's a good investment for my 401k. He wasn't able to show that. All he said was, hey, the companies paid back the loan. Everyone made out fine. It worked out. And I didn't do anything wrong. But he didn't realize that you have to show the burden of proof that you did not personally benefit either directly or indirectly. So going back to the example, if you're going to own a business 50-50 and use your IRA, you cannot be personally involved, right? In this case, this is a startup. So how does this differ from Rollins, right? Rollins owned less than 50%. He owned the business personally. Okay, that was the big difference. If your IRA is going to own the business and you're not going to personally benefit, no salary, nothing personal that's going to benefit you from that IRA investment, it's going to be awfully hard for the IRS to argue prohibited transaction. What they tend to do is they tend to look at a situation where you are using your IRA to personally benefit you. So in that example, if let's say the client owned 30% and the business was struggling and needed more money and she was going to have her IRA invest as an additional investor, now you're looking a little bit more like Rollins. Whereas here it's a newly established startup. She puts in some money in her IRA. The entity then becomes disqualified if she owns more than 50% or 50% or more, I should say. And then we have to analyze the activities. If she's not doing anything other than just passively owning the company, there's nothing that's going to trigger the prohibited transaction rules. Whereas if she took a salary, then you have that action that triggered the prohibited transaction rules. So there are many, many circumstances where you can use your IRA to invest in a business, startup, or an existing business. It's important to understand the rules. It's important to understand the reach of the prohibited transaction rules and the nexus to the investment. And that's why, again, it's a shameless plug, but that's why honestly you want to work with the experts. And as a tax lawyer, someone that's been in this space 15 plus years, I've seen it all. I'm not sure a lot of other people in the country can say that. And we'll give you the honest truth based off the IRS prohibited transaction rules. We're in a volume business, so for me, saying yes or no, we're going to tell you what's right. We've been around 14 years. We hope to be around another 50 years. So we're not going to just say yes to get your business. We want to do what's right. We want to make sure you understand the prohibited transaction rules. And ultimately, the most important thing is protecting your retirement account from any type of IRS disqualification. Yes, we do have an IRS audit support guarantee, but I don't even want to get there, right? We've never had a client that audited or even lose, obviously never lose an audit, but we've never even actually had a client, go forward on an audit and have to defend it in tax court. Sure, we've had clients receive letters from the IRS just on, the solo 401k or just confirming what their IRA is invested in, but that's something we've helped them with. We've never had a client actually have to go to like tax court or anything to defend themselves. So that's it. It's very interesting. I love playing with these rules and navigating them and coming up with different ways to protect and minimize the risks to the IRA client who wants to make a specific investment. It's a lot of fun and something I enjoy doing. So that's it. Hope you guys enjoyed today's podcast. Appreciate all support. If you're listening, thank you. If you're watching on YouTube, thank you. Just don't forget to subscribe. Don't forget to also subscribe to the podcast. It's a weekly podcast. I've been doing this, I don't know, it's like almost 5 years already. So hope you're enjoying it, and hope to see everyone again next week. Thanks and have a great day.